Hey guys, good morning. Good morning. Welcome to another stream. Hope everybody's having a good day. Hope everybody had a good weekend. Like always, my name is Jose Najarro, and I stream before the market opens, right? Just to take a look at what some recent news are. And if you guys have any questions on what stocks you guys want to take a look at, feel free to post on the comments. So like I said, I hope everybody had a good weekend. Give me a quick second to set everything up. It's Monday, so it takes some time, right? But if anybody has any stocks they want to take a quick look at, feel free to let me know on the comments. I recently just did a video of some stocks I'm looking to purchase this week. I hope you guys enjoyed that video. It's actually doing pretty well on YouTube. What's going on, Antoine? I think I got it right this time. um, but yeah, I think I'm gonna start doing that again on a weekly basis. For some time I stopped. But I'm going to be posting the stocks I'm looking to purchase on Saturday or Sunday, and I'll most likely be buying them on Thursday. So let me just get everything set up. Give me a quick second, guys. And hopefully the volume is good right now. And let me just final thing. All right, I think we're good to go. The first thing I want to take a look at is are there any earnings happening this week? And I don't think there's anything impressive happening at all, if I may say so. Maybe some of you guys might be into some of these stocks, but we're kind of in the dead end of earnings season already. What's going on, Morrissey? How's it going? And like I said, guys, if you have any questions or any stocks, feel free to ask. I try to be as transparent as I can. And I try to look at whatever stocks you guys want to take a look at. The only one that I think might be super interesting might be UiPath. I don't know if you guys follow ARK. ARK has been buying this one. I do believe this is the automation, a form of robotics automation. Let me take a quick look at their website. I'm pretty sure I've done a video on them before. Yes, the automation platform where they have these little software robots. So that's going to be on Tuesday, UiPath. Then the only other one that I think could get some form of traction, not one I follow, but would be RH and GameStop probably. These two, obviously GameStop with everything that's happening right now. RH and actually Marvell. Isn't that the semiconductor company? I think, I'm not sure if it is that one. Yeah, it is. The tech company. It's American, which develops and produces semiconductors. So actually that one might be interesting today as well. Stitch Fix might be there. Let's see, Wednesday. Besides GameStop and RH, I don't think there's too much there. Thursday, what do we have? We have Chewy. I think Chewy has been pretty popular in FinTech community right now. We have Dave and Buster's. As things are opening back up, I wonder if investors might be wondering how that market is doing. But like I said, we're pretty much in the dead end of earnings seasons. I want to take a look when earnings seasons begin again, and usually Micron Technology is one of the first companies to report earnings. So let me take a quick look at when their earnings date is to see when kind of 6/29. So we're probably gonna have like 2 weeks. Yeah, 2 weeks of quiet earnings. But then once June 29th hits, we're gonna start getting earnings seasons again. I just want to take a quick look at earnings calendar to make sure that's happening. So is anybody thinking of purchasing anything this week? I want to select date. Let's take a look at June 21st. And let's see what's trending right now. Anything really good trending? CCIV, I mean, this is the EV stock. It's up 3%. Man, Lucid, there we go. Lucid is up 3% for the day. It was up 4.3% last on Friday, so that's pretty impressive there. I don't follow this one too much, but I know it's out there. Workhorse, still trending up, right? I know this was one that was heavily shorted, I believe, and took a huge hit. More, so you want to take a look at BNGO and SENS. We can take a quick look at those fundamentals real quick. Morsi, I see BNGO is trending. Bio Nano Genomics. Are you looking more of Morsi? Are you looking more into trader or more of as long-term investment type deal? Feel free to let me know on the comments. Let me just pull up all my charts real quick. And guys, while you're here, make sure to hit the thumbs up. It really does help out with the channel. I really do appreciate the support. Let's and we'll jump in here in a second, Morsi, for long term. I just want to keep looking at news really quick. Make sure everything is looking fine for this morning. Futures are looking okay, right? They're pretty flat. I like flat better than red. So that's okay. Nothing really seems to be pushing the market, so I can close this out. Let's see what else we can look at. I want to take a look at what are some of the stocks making the biggest moves pre-market. What do we have here? Amazon. First human CEO Jeff Bezos announced that he and his brother Mark will join an auction winner aboard the first human spaceflight by Bezos' Blue Origin on July 20th. Bezos is set up to step down as CEO on July 5th in favor of... Oh, wow, that's pretty crazy. I obviously heard of Blue Origin. I didn't know they were kind of that close to kind of getting the first human spaceflight. But that's actually pretty cool. Anything else here that seems interesting? Meme stocks. Nordstrom Motor received a delinquency notice from NASDAQ due to late filing for its quarterly report. The electric vehicle company said it does intend to file its form. That sucks, right? I mean, that's actually kind of... Why? I don't know. That's just insane. How does a company, especially a new one, right? I think you should be on top of stuff like this, making sure you don't, especially being a recent IPO, the last thing you want to do is either get the SEC kind of mad, or here, in fact, they do the NASDAQ due to a late filing for its quarterly report. This is kind of just like a bad taste, in my opinion, to investors, right? Like, you should be on top of this. I feel like if you're an investor now, you feel like a parent trying to scream at your kid, hey, get your homework done. Polly, good morning. Short squeeze target with long-term potential. Skills, CCIV, and SoFi. Those are looking pretty good. Yeah, I mean, I do enjoy Skills. I have it in my portfolio, Polly. I don't have SoFi in my portfolio, but I do enjoy it, and it's pretty impressive the kind of movements it's making. CCIV is probably the one I follow the least. I've done a few videos on them, but those short squeezes, they're definitely a story, right? I don't know, do they normally last? I know we've seen some short squeezes go up and then they pull back down. So for long-term potential, I don't really see short squeezes really meaning much. Microsoft won approval from US antitrust regulators for its $16 billion to buy artificial company. Nice. That's pretty cool. Visa, was going on, was upgraded to overweight from neutral. Okay, Visa card and MasterCard, I feel are being slept on. I don't have them in my portfolio just because they don't really match the type of growth I want. But they're definitely pretty strong ones to have. Peloton, the fitness company maker, was rated buy in new coverage, which noted a 40% drop from January highs. Yep. All right. So what do I think about Ford's revenue for the next years? I mean, we can take a quick look at what analysts expect. I mean, Ford has definitely shifted a bit, right? I don't follow too many car companies, but it seems like car companies have reduced the amount of vehicles they provide. I know Ford is one of them, and just focus on some of their biggest players. I did take a listen to their most recent earnings, and I have a video. Definitely check out my channel when they released their earnings. I want to say 2 months ago, probably, I think it was. And I do talk about Ford, so I do believe I have better insight there. One thing though, they are pushing on these EV vehicles, and they mentioned, right, the Ford Mustang. I forget what it's called. The Ford Mustang Mach-E, the Mach-E, I believe, is always selling out. I mean, and I think that's pretty impressive. They did mention that this upcoming quarter, because of the automobile semiconductor shortage, they are expected to produce 50% less vehicles, so that is going to impact the overall revenue for this quarter, but it is due to an issue that they can't really solve themselves, right? The semiconductor is something affecting most automobile companies. I believe there are a few that might not be affected too much, but Ford is definitely one of them. So I do believe that's gonna impact the overall company's revenue this year, but I think investors already foresee that, and they're more looking at future revenues. and it's pretty much how consumers like their new EV products. I think that's really going to drive the stock price. But right now, it seems Ford has been doing amazing, right? Let's take a quick look at Ford stock. Ford stock in the past month is up 35%, right? That is pretty impressive. In the past 6 months, it's up 73%. So Ford has been a beast nonetheless. And guys, while you're here, make sure to hit that thumbs up. It really does help with the channel. All right, so Morsi, are you still here? Let's take a quick look at BNGO. First thing I want to mention though is Bio-Nano Genomics. Genomics is a market I'm not familiar with. So this is a market I normally don't invest in just because I'm an electrical engineer, right? I like to focus on technology companies, mainly like semiconductors. Those are markets I really do understand. Genomics is completely in the other side of my spectrum, I would say. So not a market I follow. But if we take a look at technicals, Morsi, this one technically is sitting at good volume area right here. So I mean, this is right now sitting at $6.87. Pre-market right now is up $7.73. I do think when it opens up in technical terms, technicals don't really mean much to me, but it will be a bit overextended. When things are a bit overextended, it doesn't mean the stock is gonna pull down, but there's always a higher chance. So it is gonna be overextended a bit. What's going on, Fizz? Did you see the podcast I posted on semis? It's pretty nice. Fizz, was that the Motley Fool podcast you posted yesterday? If no, yesterday was pretty busy. I haven't really looked at it. But if it's about semiconductors, I'll definitely take a quick listen too. And what's going on, Johanan? Hi Jose, can you check ENTG? Yes, we can take a look at that one in after this. So we're taking a look at BNGO right now. First thing I'm seeing, this company is expected to grow its revenues at crazy level, 55.9% on average for the next 3 to 5 years. So this is a monster growth company. Unfortunately, when you see stuff like that, it means one thing. This company is pretty much on its startup phases or starting up right now. We can see this company is not positive in cash flow from operations. They're also not positive in earnings, and they're not expected to be there anytime soon. So right off the bat, BNGO for me would be something called a speculative play. Speculative plays aren't a negative term, but it just means I understand they have higher risk. So because they have higher risk, I more likely have to be more strict on them on their balance sheet. And if they were ever in my portfolio, they were to open up as a small position, right? They're not. I wish they were at least positive in cash flow from operations. If we take a look at their balance sheet, though, their balance sheet looks pretty good. They have about $362 million in cash and about $14 million in debt. So they're net positive in cash of about $350 million. That's a good thing. That's definitely pretty good. I want to see how much they're burning a year. They're burning, if you guys can take a look at cash flow from operations, in the past 12 months, they burnt about $44 million in cash. So with about $350 million, they're able to survive in theory for about 8 to 9 years. So that to me tells me fundamentally this company is, even though it's not providing strong revenues, it's not providing positive in earnings, it's not providing positive cash flow from operations, it has enough cash to survive for plenty of time. So at the same time, this is just for me, Morsi, would be a speculative play. It seems like it's very early on in its business, so it's one that I wouldn't mind entering with a small position as a long-term investor. But it still has so much to prove, right? They are expecting FDA approval. So FDA approval, like I said, I'm not much in the bio industry, but I do believe the FDA approval means a lot for companies like this. So that's pretty much the overall testing process, right? So there's still so much this company has to show off before investors can be very confident. So again, it doesn't mean it's a bad investment, just means it's a riskier investment than average. And that's the difference, right? I don't think risky investments are bad investments as long as you understand the risk and as long as you understand how much exposure you have to that investment. For me personally, I just because of the market in general, the genomics is not one I would enter. And Fizz, yes, that's the one. Doesn't go into AMD or Nvidia, but it goes into other big ones needed for manufacturing. Oh, nice, Fizz. That's actually pretty interesting. Do you know what are some of the big ones they talk about? Some of the manufacturing companies. Johanan, hope you're still here. Let's take a quick look at ENTG for you. This one's pretty interesting. Another, this is a semiconductor. Oh, nice. I might have looked at this one before, but let's start off quickly with technicals, right? ENTG, Integris. Right now, if we take a look, this company has definitely seen some amazing days for sure. The first thing is it is a bit overextended from its medium moving average, and it is a bit overextended from its short-term medium average, right? It's definitely it is very overextended from its long-term moving average, but normally I just take a look at these two, and when I determine when to purchase, if it's around here, this is a small position, I add in over time. Medium position, continue to add over time. Large position, and continue to add over time, right? So it, again, technicals doesn't really determine if I buy a stock, it just determines how much of a stock I'm willing to buy over time. Adam, appreciate these videos. Adam, appreciate the support. It really does mean a lot. Hope you had a good weekend. I definitely did. I hope you did too. It was pretty relaxing. It was definitely a relaxing weekend. I got to do a video a day, which was great, and also spend time with the family and the wife. So definitely a good time, and I hope you guys had a good weekend for sure as well. So now let's take a quick look at fundamentals for this one, Johan. So first, if we take a look at future growth, this company is expected to grow 9.8% on average for the next 3 to 5 years. That's actually pretty, it's not a heavy growth stock, but I can already see why. This is more what I consider value growth. Value growth is when the company is positive in earnings, positive in cash flow from operations like this company is, and it's also growing at decent levels. 10% is nothing to sleep on, right? It's not as fast as some of these other players, but you kind of get this kind of simplicity, or I want, not simplicity, I want to say this calm of the storm of it being positive and profitable, right? Next, if we take a look at their overall financial health, a company like this, it's okay if they're leveraged because they have the business behind them, and they are, right? They have about $500 million, $550 million in cash and short-term investments, and they have $1.1 billion in debt, right, Johanna? So they are a bit leveraged, but this isn't something that would scare me off because we saw they had positive earnings and because they have positive cash flow from operations. So overall, their fundamentals are looking okay. I just want to take a quick look at ownership. Who owns it? Most of it is owned by institutions. What is the market cap? This is a $15.7 billion company. And let me take a quick look at one more thing. Let's take a look at the overall metrics for this company. This is ENTG, right? Integris. I want to take a look at EV to, oops, wrong one. I want to take a look at EV to EBITDA forward ratio. Just to see. So the first thing I'm looking at, right, is compare, let me go back a little bit more in time. Let's do this. All right, now let's do this. So one thing I could see about Integris, right, Johanan, is in forms of valuations. Here I'm taking a look at EV to EBITDA and both price to sales ratio. This company it's almost at its peak of where it's been, right? It peaked somewhere here in the late quarter of 2020, January of 2021. It kind of peaked, and it hasn't seen much of a correction. So that's it, and it's definitely a lot higher than it's normally been. So that's something I just want to say to be careful about. It is overvalued in terms of historical numbers, right? That's the only thing. It doesn't mean it's overvalued as a stock, but it is overvalued from its prior numbers. There could be a reason, right? Has there been a new product that's been announced? Has there been new improvements in the company that is justifying this increasement in valuation? If so, then it might not be something to look at, but if not much has really changed, that's just something to keep an eye out, right? So if you guys have any other, I hope that's good for you, Johanan. And if you guys enjoy the content, like I said, feel free to post, to feel free to hit that thumbs up. It really does help the channel. So Fizz, they talk about Lamb, Applied Materials. Wow, they do talk about a nice amount. Texas Instruments, Intel, and TSM. I'm definitely gonna take a quick listen to that later today, Fizz. I appreciate that. Jose Valdez, Fizz, and just Fizz, out of that podcast, what was probably one of the favorite things you heard about, or something that like really blew your mind? If there was any moment that made you go wow in that podcast, or was like, oh, that's pretty interesting, I did not know that. Jose Valdez, what's going on? Good morning. Your thoughts on BHVN or MP? Any form, which one would you prefer, Jose? BHVN or MP? Let's take a quick look. What's the market? Market's still not open, as I see. So that's pretty interesting. MVIS has been killing it. I feel like, I don't know if it's killing it, but it's always trending. Nothing else is going on right now. So let's see. I'll wait for your response, Jose, to see which one you want to take a look at. First, let me take a look at any recent news. Anything else hitting the markets right now? Forget AMC. Two traders share their own high risk rewards. Thoughts on Spotify? Adam, Spotify is one I'm enjoying a lot. I don't know if you know, Adam, for 2020, Spotify was a tier 1 stock. And we'll take a look at it in a bit, just because Jose finally responded. He wants to take a look at MP. So first, let me just understand what this company does. MP doesn't show up. MP. Is that the correct ticker? Is that the correct ticker, Jose? I don't follow it. I only see MPW. Let's see, MP stock. It's this one, MP Materials. Okay, MP Materials Corp. Let's take a quick list. I'm hoping it's this one. Let me know if this one. Are you still Renegade? Yes, I'm still holding Huya. Huya is definitely a long-term hold for me. Stock price not doing as pretty, but it's still, to me, at least it was a tier 1 stock for me last year, right, Renegade. This year was more of a tier 2 stock, just because I liked a little bit more, but I have not sold one position of Huya at the moment, Renegade. So MP. All right, if it's Jose Valdez, this is MP Materials. It engages in the ownership and operations of integrated rare earth mining and process facilities. Let's see. So first, rare metals, right? Rare metals is not, materials in general is not a market I follow too much. I feel like rare metals and rare earth mining has become super popular right now, as there has been talks, right, of battery shortage, of semiconductors, of all this technology needing this type of raw material to create their products, right? And I feel like that's where this huge popularity of material stocks have come in. I'm not saying that's a negative thing, but I feel like that market has really, that EV market for sure has definitely brought these type of stocks into some form of light. So if I take a quick look at technicals, the first thing I'm seeing is it's not too overextended. It's definitely seen a nice pull down and sitting at a nice volume area. I definitely would watch out. This is I would say this is probably a nice support where we have a nice amount of volume between this 25-26 level. So first thing I'm seeing is not overextended. Definitely a good thing I want to see. If we take a look at fundamentals, Jose, right? First thing we're seeing, future growth. This company is expected to grow its revenue 32.1% on average for the next 3 to 5 years. That's actually a nice growth stock for sure. This company is not profitable, but they are expected to be profitable in the next year. So that's impressive. They are also positive in cash flow from operations. And they're expected to grow both their cash flow from operations and their earnings at strong levels in the next year. So that's, again, fundamentals are looking pretty impressive. Now let's take a quick look at their health. Fundamentally, they have $1.2 billion in cash, and they have $743 million in debt. So fundamentally, I do believe this is a company in a great state right now, financially health, right? I don't know about the overall business, but it is looking pretty strong in its financials. Let's see ownership. Who owns it? Most of it is owned by hedge funds. Institutions own 19.3%. Individual own insiders own 11.4%. This guy James Litinsky, which is the CEO, owns almost 10% of the business. So this one, I mean, I don't follow it too much, but fundamentally, it doesn't look bad at all. And in form of technicals, I do believe a good portion of the risk has been eliminated. Obviously, the stock can continue to go down, Jose. Not one I would own in my portfolio personally, just because I'm not too familiar with the rare earth metal market, and not a market that really excites me right now. Maybe that might change in the future, right? So I hope you guys enjoyed that one. Let's take a look. Spotify. Adam, Spotify. You know, Spotify, like I mentioned, for 2020, it was a tier 1 stock for me. I got Spotify at some nice levels in the 100s. It's gone up to 300. I think now it's sitting in the 200s, and I do believe it's looking pretty impressive right now. 236, right? So this is a market cap of $44.9 billion. My favorite thing about Spotify is that this is a market, right? I do believe the audio market is a market that's going to continue to grow. Spotify always, in all their earnings letters, they always mention how they're trying new things. How they're trying to innovate a new way to get listeners to listen, to get their artists to interact with their customers. So I do think Spotify is a very innovative stock within itself, even though not all of their products come out, right? They might try something out and it might not work. So they don't release it to the public. So maybe the public doesn't really see what Spotify is doing. But I do think they are very innovative. Right now, if we take a look, the stock has taken a huge hit from its all-time highs. It's down 35%. If we take a quick look at technicals, let's take a quick look at technicals for Spotify. Right now, this company, right, this is crazy, right? When it's sitting at these, like I mentioned, right, if it's sitting at a long-term moving average and I'm really enjoying the company, that's when, if I want to increase my exposure, that's when I go a lot heavier, right? If I can't buy a big position at once, I try to buy in a little bit, a lot more frequently, right? I would buy something like this on a weekly basis and increase my exposure when it's like this. So it's definitely not overextended, and it's sitting at a good volume area of 230-ish. Right, we can see a nice volume there, and it's actually been supported for some time. If we take a look at future growth, Adam, right, this is a company expected to grow its revenue 16.5%. Not growing at crazy levels, right? I feel like people nowadays, they're looking for companies growing at ridiculous levels. 16.5% is pretty darn impressive. I mean, imagine if your portfolio grew 16.5% every year. I'm not saying that's what's going to happen with the stock price, but just imagine how strong 16.5% annually for the next 3 to 5 years really is. This company, unfortunately, is not positive in earnings, but they are positive in cash flow from operations, and that's what you like to see, right? They have money coming in from their everyday business to continue to make innovations. If we take a look at their health, financially, they are strong, right? They have about $3 billion in cash and short-term investments and about $1.2 billion in debt. One thing I did not like, though, is this was a company that for a long time had zero debt. So until recently, they kind of built up this debt position. I forgot what was the reason. I think it was some senior notes, which built up their overall cash position. But I personally like them a lot more when they had zero debt. Even though they're not leveraged and even though they are positive in cash flow from operations, it sucks to see a company that was what you would say was an A+ student. It was an A+ student with zero debt become like an A-. It's still looking pretty good, but you still kind of see that letdown of going from an A+ to an A-. That's what pretty much happened to their balance sheet, in my opinion. Adam, they have such a massive user base, it would be difficult to grow exponentially for 5 years. Agree, right? But at the same time, I do believe 16.8% is super strong. If we take a look at ownership, I do like, right, Tencent owns 8.7% of this business. The CEO and founder owns 8% as well. So we can see institutions own about 60%, general public own about 12%, private companies own about 11.1%. Now let's take a quick look at Spotify in these metrics that I normally look at. So let's see, Spotify, what do you have to show me? What's going on, Jabiki? How's it going? All right, so they're not positive in EV to EBITDA ratios right now. So let's take a look at them in price to sales ratio. So forward 1 year. Right now, it's at levels last seen in this. What big job I think was during their earnings. But last seen in like, what is this? Summer. This is May. This is September. So this will be somewhere around June, July of 2020. So right now it's sitting at levels last seen 12 months ago. So it definitely is a bit undervalued compared to its average price. I'm liking that. It just, to me, tells me a good portion of the risk has been eliminated. And if I ever wanted to increase my exposure on Spotify, now would definitely be the time where I feel comfortable entering, right? For sure. I haven't sold any positions on Spotify since I entered, and I have added along the way as well. And I haven't sold one share. I'm not expecting to selling a share anytime soon. Hey guys, while you're here, make sure to hit the thumbs up. It really does help. I know I sound like a broken record, but it definitely does help out with the channel a lot. Anson, Nvidia is going crazy for sure. I mean, it's today the day they announced the split-wise. Nvidia has been a monster. In the past month, it's up 20%. In the past 6 months, it's up 30%. This is a tier 1 stock in my portfolio. One I've been talking about for a nice amount of time. It became a tier 1 for 2021. And it became one of my biggest positions in, I want to say, between this time frame. Somewhere around here, between late February and early March, I became a huge owner. It became my number 1 position as I took some advantage in growing this play. And now with the overall gains, I do want to say, right, things like this are a bit scary to some extent. Even though I enjoy seeing the gains in my portfolio, right, I obviously enjoy, my portfolio has definitely risen a nice amount because of Nvidia. Being risen up so quick is not something I like to see. So I do believe in the near future, we might see some form of pullback again on Nvidia. It's not a guaranteed, but I do believe the risk is now a bit higher since it's gone up. In the past month, it's gone up 20% alone. And since it's all-time high, and since it's all-time lows, since it's 1 month low, it's gone up 30%. So enjoying it, but I have to remember, I do believe it's gonna pull back. And do I believe there is a higher risk of it being a pullback? Better way to say it. Hey Zeus, what are your tier 1 stocks? My tier 1 stocks are Nvidia, which is showing why it's a tier 1 stock. Then we have Sorens, right? Sorens has been a sleepy guy, man. This one's pretty impressive. This one is a sleeper, for sure. It's sitting at 110. I know we were talking about at 85, at $90. It out of nowhere, this one has been a beast as well. Sorens. This is a software company in the artificial intelligence for voice recognition. Now, the main components that they're hitting, for those that don't know about Sorens, is the automobile industry, but they're also in moving into other markets. So Sorens is also pushing my portfolio up right now. Then another one in my tier 1, Jesus, is C Limited. C Limited is one that it's been pretty quiet in the past few months. They're seeing some run ups and down, but it hasn't really moved. Luckily, this is one I built up a position earlier on throughout the year. So C is that one. And the fourth one is the one that's really hurting me right now, Unity. Unity is the only one I think I am red on right now. But this is still a company I am super bullish on for the long term of things. And one that, again, same thing. Even though I am red on it, most of my position has been added during these times. I think I'm only a few percent red on this. But in the long term of things, I'm still super excited about Unity. Fizz, you think Nvidia is so yes, Jesus, those are my main tier 1 stocks right now for 2021. And those 4 positions make up about 30% of my portfolio, maybe 32. Actually, now with the overall gains that they've seen, they're probably a lot higher than 32, maybe 35, 36 percent of my portfolio on just those 4 stocks. So Fizz, you think Nvidia's number 2 now? It's one of the few positions I'm thinking of trimming and adding to AMD. So just because for me, for tax reasons, and because I'm really happy with both my AMD and Nvidia position, I don't want to do that. But let's say I had no reason to pay taxes. Let's say I had no reasons to, let's say I had a weaker position. Let's say I had a weaker position in an AMD. I think I would follow suit, Fizz. I do believe AMD is it's been pretty quiet. It's been too quiet, way too quiet in my opinion. It hasn't moved since July. Look at it. It hasn't since July. It's gone up 4.3%. AMD is one that it's one that I do believe in the next. It's gonna see a crazy run up. It definitely is. Their Silenex, Silenex, whatever Silenex acquisitions are bound to happen by the next few quarters. New markets. Their presentation was super strong. So AMD is definitely one I can see running up in the next few quarters. At the same time, this is probably my number 5 big position. So no reason to increase my exposure right now. What stocks are you adding in right now? So Jesus, I actually just did a video yesterday. Let's take a quick look at my YouTube channel. Let's see, Jose Najarro stocks. Here we go. I'm myself's biggest fan. I did four stocks. These are 4. I did this video yesterday. 4 top growth stocks to buy June 2021. I'm gonna be doing these again on a weekly basis for some time. I stopped because I wasn't buying stocks on a regular basis due to some income changes in my life. But now that things are back to normal, I am restarting this series. And these are 4 stocks I am going to be buying every week. So out of these 4 stocks, it was Shopify, Square, Crowdstrike, and Twilio. So out of these 4 stocks, I am probably going to buy 2 out of them. Unless something dramatic changes in the market. Thursday is when I get my money into the market. So that's when I'm going to buy either all 4 or 2 out of these 4 stocks. So if you ever want to know what stocks I'm buying into, Jesus, definitely check out this series. I'm going to be dropping it every Thursday, every Saturday or Sunday. And if you want to know when I buy stocks real time, I post it on my Discord channel. If you go to my Discord channel, here you have overall accounts. And in overall accounts, I post like 2 or 3 minutes after I purchase a stock whenever I purchase or even sell a stock. Again, it's not advice, it's free. It's just to be as transparent as I can be. So Jesus, those are the 4 stocks I'm looking at to buy this week. Out of those 4, I'm pretty much picking out maybe 2 or 3. Anyone have any suggestions to buy today? That would definitely be pretty good, Alex. You know one thing, Alex, if you are a long-term trader, one thing I do suggest doing is looking at your portfolio and see like what markets you're bullish on. Let's say I've done a few videos on it in the past. Let's see, where did I do this? I do this before something. Man, I've done so many videos. I think it might have been this one. So this is one thing I do before buying stocks. So I definitely do this before. I take a look at my portfolio and I take a look at how much exposures I have into certain stocks. And then there are certain stocks I might feel, hey, I'm a little bit more bullish than 1%. So this came out May 10th of 2021, and I think this was my portfolio for May. But it helps me understand, hey, look, I'm super big. Nvidia currently at that time held 8.6% of my portfolio. So even though I was bullish in that company already, I'm like, all right, I'm already too heavily exposed in this stock. Let me move on to something else. And that's what helps me determine what I want to buy in a stock. Spotify, Shop, right? Don't own too much, and these was in May, and some of these are ones I've been buying, right? Shopify, Square, ones I've been buying. I forget, Neo are ones I've been buying. So this helps me understand what stocks I'm in, how big of a position they are in, and how much exposure I want to increase. So that's Alex. If you're a long-term investor or trader, definitely check this out for sure. And I think I did a follow-up to this after, let's see, when was that? That was on, do this, do. I know I did one other video. Do this now before buying. Another thing I do before buying a stock is look at my overall exposure in forms of market. So here, these are the markets I'm investing, right? I'm in AR, I'm in cloud, I'm in e-commerce, I'm in EV. So I see which positions, which markets I'm more exposed in, and which ones I want to increase my overall exposure. So those two things can really help out determining what stocks one would like to purchase, because it shows you, hey, I feel I'm a little more bullish on AR and VR, so maybe I should increase my overall exposure there. So that was a complete rant, but definitely worth noting. I think that's great value for those that want to learn a little bit more. So Jose, what are you gonna? When are you? I'm not sure, Fizz. I don't know if I want to buy back into Peloton anytime soon. Right now, I definitely want to increase my exposure in a few stocks before I really start looking at new stocks. So I really want to get some big positions in some big players, like Spotify, for example. Spotify, I think, might make it on my list next week, for sure. CrowdStrike, definitely. I think CrowdStrike, with the overall cyber attacks we're getting, I do believe CrowdStrike is a market that's in the cybersecurity is going to be one that's going to continue to grow, and obviously going to help out Nvidia to some extent as well. So guys, if you guys have any stocks you guys want to take a look at, feel free. First, feel free to post on the comments. Let me take a look at my overall portfolio right now. Let's see, portfolio. Let's see. I got a mixture of red and green. Some of my big players are up. We have Celsius is up. This one's still being a monster. I just don't know how much more it can go. Sorens is also up 1.3%. We have Nvidia up 0.3%. Unity up 0.2%. We have some red players here. Not big players in my portfolio, so that's okay. Shopify is actually down 1.4%. I'm happy to see that for sure. Twilio is down 1.3%. I'm also happy to see that. CrowdStrike. And so, right, these are stocks I'm planning on buying on Thursday or Wednesday, maybe Friday. So I'm happy to see them down. Huya, I know Huya is going to make the list pretty soon as well. Thoughts on TTWO? TTWO, Shishu, that is a nice gaming player, right? I enjoy Activision a little bit more, but let's take a look at TTWO. So TTWO right now, if we take a look at technicals, right, Shishu, sitting at its not overextended, right? Definitely not overextended. Sitting near its moving averages. Let's take a quick look at fundamentals of TTWO. Take-Two Interactive Software, for those that are not familiar. This is a gaming stock, right? Sitting a market cap of $20.2 billion. If we take a look at future growth, this company is expected to grow 11.1% on average for the next 3 to 5 years. For gaming stocks, you can't really see high growths because of the way the overall market goes, right? It goes up when they release a new game, then it goes down, then it goes back up. That overall affects the moving average. But this is a company that's positive in earnings and is positive in cash flow from operations. So fundamentally, they're looking pretty good. If we take a look at their financial health, this is what you like to see, right? A company that's profitable, positive in cash flow, growing at some great levels, $2.7 billion in cash, 0 debt to their name. So this is definitely a strong balance sheet. Shishu, I'm liking it, right? I don't have too many of these I wouldn't say slow growth, these value growers in my portfolio, mainly the gaming. Right now, I just recently started buying back into Activision. I think a month ago, I opened up a position again in Activision. And I don't know if I'm going to do that anytime soon again. But let's take a quick look at ownership. Who owns? Come on, let me just... A lot of insiders have been buying and selling in the most recent. Come on, this is insane. I just want to see who owns. Holy smokes. So institutions own 90.8%. Okay, so institution owns most of this business. Let's take a quick look at let's see. Oh yeah, I mean GTA. It's impressive how GTA 5 has like gone through every single freaking gaming system, and it is still very very popular. But let's take a look at Take-Two Interactive. I want to look at one better. EV to a beta. And let me compare it to some other ones. ATVI, and let's add EA Games to the mix, right? Let's take a look at EV to a beta forward. So out of the three, here we have EA Games, we have Take-Two Interactive, and we have Activision. Right? Out of the three, it does seem like Take-Two Interactive is more expensive than the rest, right? And the other thing we're seeing is this is the only one that hasn't really seen a pullback. Is there a reason for this? There might be. Is Take-Two Interactive growing at faster levels? Then let's take a quick look at something. I want to see. Let's do a sharp machines here. I don't want. Let's do TTWO. There has to be a reason. Let's take a look at profit margins. I want to take a look at a few things. First, let me take a look at gross margins. We're also going to take a look at profit margins. And let's compare them to EA Games. Compare. And let's take a look at Activision too. Activision. Compare. And I want to take a look at trailing 12 months data. All right. The first thing I'm seeing is Activision is, if we take a look at trailing 12 months, Activision tends to have higher profit margins than the rest. EA tends to have the second on average, and Take-Two Interactive, even though it's the second in this trailing 12 months on average, it always seems to be the least. So I was trying to find a reason that why this company, why Take-Two Interactive was a bit more expensive than the other two. I can't find it. Maybe the only reason is this might be growing at faster levels, but at these levels right now, Shishu, even though it had a very strong balance sheet, even though the overall gaming market, I personally would enjoy Activision or EA Games a bit better. To be honest, it does seem like EA Games might have a little more bang for its buck in forms of valuation metrics, but overall, it might be just because I am an Activision player myself. I do enjoy Activision. But this is where this is weird, right? You've seen these, they kind of move with each other, right? They go up together, they go down together, they go up together, they all went up together. Then they kind of had this little thing where they all go down together. Take-Two was the only one that pulled back up, where all the other ones have been pretty quiet. There might be a reason, right? Something must have happened here that got investors pretty excited, but that's just something to keep in mind now. Lucas, have you seen the new AMD percent? I don't think that was the LSS. Let's see AMD. The super resolution. I have to really, I gotta say, Lucas, I haven't really read into it. I have to take a quick look at this later on in a bit. So thanks for sharing that, Lucas. This is probably something I'm gonna take a quick read later on today. But if anybody, Shishu, I hope you enjoyed that. Again, it doesn't mean Take-Two it's a bad investment, not at all. That's not what I say here. But to me, I just enjoyed the other two a little bit better, but fundamentally still look pretty impressive. Right, and like I said, right, we see what there has been a big increase. There is a potential reason for that. Has something new come out for the company? And I'm glad you enjoyed it, right? Are there any other stocks that you guys want to take a look at? If not, let me take a quick look at how the overall market is doing. Or is any big news happening right now? No, nothing here. I can probably close this out. Let's take a look at what's trending. Anything important trending? No, nothing pretty cool. Trending. BNGO is up 21.4%. I know someone here, I forgot who it was just talking about it. That's insane, right? It's up big. So congratulations if you're owning it. Semi-Leds Corporation. I feel like I've heard of this one somehow. But no, that's pretty much about it. So guys, if you have any stocks you guys want to take a look at, feel free to post on the comments. If not, I will be tuning out then. I'll give you guys a few minutes or a few seconds if you guys have any questions, right? I've been investing for about 7-8 years now. Not a professional, nowhere near, but I do have some experience under my belt. So if you guys have any questions of maybe books, of websites I use, or just some other questions, I try to be as transparent as I can. It doesn't matter if it's a newbie question or a more advanced question. I'll try my best to answer, and that's what I'm pretty much doing these live streams. Just try to give back to you guys, right? I appreciate you guys supporting the channel. I appreciate you guys watching the views, the videos. So I try to give back as much as I can. So let's see, what else can we take? Let me take a look at my overall portfolio. Any big changes? Magnite, wow, Magnite is up 7%, but this one has been taking a huge hit. DraftKings is up 3.7%. Now that sports are back up, I mean, we're seeing a nice amount of events come out. I've seen people betting a nice amount. So that's actually pretty cool. Unity, thank the G, whatever. Unity is up almost 2% for the day. So it does seem like a nice day so far. Nothing too red in my portfolio. Tesla is still below 600. That's there. Shopify, C, they're down, but not really down, if you know what I mean. All right, Rizviz, I do believe we have taken a look at ASML. ASML, I do believe they create some form of develops, produces, markets, and sells services. Let's actually take a look at their website, what they do. ASML. Kiam, remember a couple weeks ago I asked you to look at them. So Kiam, my apologies. I always get so many comments and stuff like that. That I look at so many stocks. We could take a quick look at it today. Maybe I might remember why I might have said that. Let's take a quick look at ASML real quick. I want to also see what they do. So ASML Holdings, the world's supplier to the semiconductor industry. So what do they provide? Let's see. Our customers include all the world's chip makers who use our product portfolio to manufacture a wide range. See their products. Let's see their products. All right, so they do extreme ultraviolet systems, which is needed to make like the wafers and all stuff like all the semiconductor products. You need these two systems, and deep ultraviolet. All right. And they also sell, all right, so they sell, all right, so just off the bat, they sell the products, they sell the equipment needed to pretty much create manufacturing, to manufacture chips, right? So that's obviously a great market to be in, right? This is pretty much the gold, the axe and gold story, right? Where it's better to own, it's better to own the pick instead of the gold, or better to sell the pick instead of wanting to get the gold. Whatever that story is, right? But pretty much they create the equipment needed for semiconductors. So this is a pretty niche market for sure. Now let's take a quick look at their fundamentals. Let's start off actually with technicals. So ASML, I'm pretty sure it's gonna be overextended, right? Pretty much how we're seeing a lot of semiconductor companies. This is one of the biggest risks right now. It's continuing to go up. This seems like growth stocks a few months ago, right? They just continue to go up, a bit overextended from their short term, very overextended from their medium term, super overextended from their long term. So I want to say that is a risk. Doesn't mean it's a reason not to invest, just a reason to understand. So they have a market cap of 230 billion euros. So they are a pretty big company. Future growth, this company is expected to grow 10%. Not a growth stock, a value growth in my opinion. This is one that is positive in earnings. They are positive in cash flow from operations. If we take a look at their financial health, they're looking pretty good. $4.7 billion in cash, $4.4 billion in debt. right, Fizz? They are not leveraged, and because they are positive and all those other things that we saw, it would have been okay if they were leveraged. They also have about $4.7 billion in inventory. Normally, I cut this in half and add it to cash and short-term investments. So they have a lot. They have about $7 billion in cash compared to $4.4 billion in debt if you do that move that I just did. Now I want to take a quick look at, let's take a quick look at some charts here. ASML. Oops, wrong one. So let's cancel these out. ASML. And a few other things. Let's take a quick look. Let's go back to red flags and let's do ASML here. I want to take a look at how this company has been doing historically, right? Have they been improving their margins? So in the past year, they grew their revenue 28%. They grew their revenues 5.5 the year before that and 16.9 the year before that. So okay growth. Their margins have been pretty still as well. To be honest, I can't see why the huge run up in stock price. They did see a nice amount of growth. But I do want to say there is a nice amount of risk right now with the overall valuations going up. Let's see what we can see of ASML. So it definitely saw a pull down. Let's take a look at 3 years. But it is on average, if we take a look at its EV to EBITDA forward, it is sitting a lot higher than its average than it's normally been, right? But I want to say that's probably the only risk I see with this stock is just the overall valuation at the moment. Doesn't really deter me if I wanted to buy. It just tells me, hey, Jose, if I was to buy at the moment, it would be with the smaller position size. So the final one we were going to take a look at today. Actually, if you guys feel free to post any others, maybe we have time for some more. STEM stock. So STEM Holdings. Okay, now I remember why. It's not... Let's see, STEM Holdings. What is the market they're hitting? First, this is Kian, right? Let's take a quick look. This is what we would consider a penny stock, right? It is super small, $92 million in 92 million US market cap. That in my opinion is super small. So a company like this is one that's very volatile. Let me take a quick look at days. There seems to be at least this decent value in this company. It's not one that doesn't have much volume. If we take a look at technicals, it is a bit overextended from its moving average, right? Definitely a bit overextended. Oh, this is not it. This is not it. Which one? Let's see. Kiam, is it STEM in what market is it in? Is it in the NYSE? This one. Okay. Defmo's Magnite. That is definitely in my portfolio right now. I definitely do enjoy Magnite for sure. And we can take a quick look at it. So this one, it's this one then, I'm guessing. Let's see, STEM. All right. So, Kiam, is it this one, the one in the New York Stock Exchange? Let me know if it's this one. Energy company. So normally the energy company is not one I normally focus in. Vista, yeah, Vista AMC. I'll take a look at that tomorrow. STEM Inc. All right, so STEM Inc. So first, this is a market cap of $4.09 billion. So it does have a nice market cap, right, for sure. I definitely was looking at the right technicals for it. The only thing I do want to say is it is a bit, pretty much the same thing, right? It is a bit overextended from its moving averages. That's one thing I was going, I know you were playing Vista. But yeah, first thing I would say in technicals, it is a bit overextended from its moving average and from its moving averages. That doesn't, again, deter me from buying. It just kind of reminds me that, hey, if I want to enter a position like this, it would be something super small. Now let's take a quick look at fundamentals. This is a company expected to grow 43% on average for the next 3 or 5 years. So this is one that is expected to grow at strong levels. What do they do actually? They operate as an energy technology company in the United States. The company offers energy storage solutions with Athena, an artificial intelligence power analytics platform to optimize energy use by automatically switching between battery power, on-site generation, and in-grid power. Guillaume, I don't remember this company ever. I can't believe this seems pretty interesting. The overall market that they're hitting seems pretty interesting for sure. So $4.4 billion, right? This is a company that's growing at some strong levels in revenue. The first thing I want to say though is this company is not positive in earnings and it's not positive in cash flow from operations. So this is something that I would consider a speculative play, right? Speculative plays are not bad, like I keep saying, but I feel like that word has a negative tone. It's just a position that I understand has huge risk if I was to invest in it. So they're burning about $24 million of cash per year. A company like this, I want them to have super strong health. And now, if I did look at this company, this is probably the reason I did not like it. They are a bit leveraged. They are actually a lot leveraged. They have $200 million in debt, and they have $10 million in cash and short-term investments. This is a major red flag for me, for sure, right? I mean, the stock price can move as much as it wants, and I'm pretty sure it has. It has, right? We looked at it at $19, right? So again, stocks like this just because I don't like it, and I say it all the times, doesn't mean it's a bad investment, right? It's just a bad investment for me. My risk tolerance wouldn't want a company like this in my portfolio at all. But there might be certain investors that don't really care that a company is burning $20 million in cash. They only have $10 million in short-term investments right now, and they have $200 million in debt. Again, this is some investors might be okay with that, right? And that's the great thing about investment. There is no real right answer. Every investor has their own kind of risk tolerance. My portfolio is not one that would allow this type of risk tolerance, and that's just what works for me. But this company, like you mentioned, was $19 a week ago, so maybe for you it might be great, right? But for me, it is a cool market for sure, right? 100% a cool market, right? I don't think last time I took a look at the overall business profile, and the technology that they're hitting is actually a pretty interesting one. If in all honesty, if this company had a better balance sheet for me, I think the balance sheet is the only thing turning me away. Because the market that they're hitting, once I look at this business profile, it is a pretty cool market. The thing that really throws me off is just this financial health. This is for me a big no. Again, companies can continue to survive, right? They have plenty of ways to get funds. I'd rather wait for them to get funds and have a better balance sheet than for me to really look into it. But it definitely is a pretty interesting market. And now let's take a quick look at Dave Mose. If you're still here, let me know and we'll take a quick look at Magnite. Magnite's one I do enjoy. It is in my portfolio for sure. And guys, if you guys are enjoying the content, make sure to hit the thumbs up. It really does help out. So Def Mose, let me know if you are still here. Oops, I needed that one, but that's okay. Boom, 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 boom. Let's see how the overall market is doing. Magnite up. Magnite killing it, up 9.6. So, all right, so let's take a quick look. Magnite, first thing I'm going to see is, if we take a look, even though it's had a 10% up today, I don't believe this stock price is overextended taking a look at its moving averages in the time frames that I do, right? I normally take a look at 3 to 8 time frame. So from there, the stock price is not overextended one bit. There might be, because of this volume of 10% day, there might be some, this is a very volatile stock for sure. And I do believe that's still going to continue. This is one that's expected to grow 33.9% on average for the next 3 to 5 years. For those that are not familiar with Magnite, this is one that works on the sell side of the advertisement platform in the United States and international. I've definitely done a few videos on them. Future growth, big grower, right? 33.9%. They're almost positive in cash flow from operations. They're expected to be there next year within the next rolling 12 months. They're also expected to be positive in earnings within the next 12 months. So that's pretty good. And it's not like they're far off from being positive in cash flow from operations. If we take a look at their balance sheet, they have about $468 million in cash and they have about $388 million in debt. If we take a look, most of this debt was added in this most recent quarter. They're not leveraged right now. That's a great thing. And obviously, when I added this in my portfolio, this was a company, again, very similar to Spotify. For a very, very, very long time, this is a company that had no debt, right? Zero debt to its name. So I hate to see this, right? I hate to see a company go from being to giving zero debt to building up some debt. So this is something that I am going to be keeping an eye out in the next 2 quarters, I would say, right? 1 quarter doesn't make a company bad, but if I keep seeing an increase of debt, if I keep seeing a decrease in cash flow from operations, that is going to start throwing red flags my way. At the moment, I do still enjoy Magnite with that strong future growth, and with them expected to be profitable and positive in cash flow from operations in the near 12 months. So I am liking the huge revenue growth. And if we take a look at ownership, let's see, institutions own 69%, general publics own 16.9%. There's not many individual insiders that own this company. So at the moment, no plans of selling. Maybe if I am buying, it's gonna be light buying at the moment, just because of that overall increase of debt, and I just really want to see how the upcoming quarters do for this company. But definitely not selling any shares anytime soon. So that's it for today's episode, guys. I hope you guys enjoy it. I hope you guys have a good day today, and I'll see you guys tomorrow at around the same time. Feel free to check out my videos. Feel free to hit the thumbs up. And you guys really want to support the channel, a thumbs up goes a long way. If you guys ever see one of my videos, just hit the thumbs up. Even post on the comments, just say hello, good morning. That alone helps so much, and it really does mean a lot. So take care, guys. See you next time, and enjoy.